Hello again, everyone. Thank you for joining us this afternoon for our presentation, Protecting Your Community, Condominium Insurance Trends for Directors and Managers, brought to you by McCower, Abbott, Guerra, Wagner, Vollmer, where we help communities thrive. My name is Mark Petrie. I'm the firm's Director of Marketing and Business Development, and our presenter today is Evan Alexander, one of our firm partners. Evan joined the firm in 2015 after working for over a decade as a non-attorney with another firm specializing in community association law. Now a partner in the firm, he has over a decade of experience working in community association law, including document revisions, contract drafting, collections, and restriction enforcement. He currently serves on the Magazine Committee of Community Association Institute's Michigan chapter, and he is a frequent speaker at community association industry events throughout Southeast Michigan, including CAI, as well as other organizations such as the United Condominium Owners of Michigan. With that, I'll turn it over to you, Evan. We'll get started.
All right, so there's the little disclaimer here on this first page. The presentation, of course, provides general information. While we're talking about legal subjects, they're not to be considered legal advice, and you shouldn't take them as legal advice. I'll leave this up here for just another moment so you can read through it. And if you do have any questions specific to your association in which you need some legal guidance, please certainly feel free to reach out to the firm. We'd be glad to assist you. So today's presentation, we're going to be talking about insurance and the applicability of insurance to condominium associations and things that associations, boards, and managers should be aware of. And I'm going to begin by just going through a little bit of where do insurance responsibilities arise. And there are several places. First is the Condominium Act and the administrative rules, which are promulgated under the Condominium Act. Then there are also governing document provisions. Typically, you're going to find insurance responsibilities in Article 4 of your bylaws. You may also find them in other articles, but typically that's where they would be found. Those provisions will help you to determine whether it is a co-owner or the association that is responsible for carrying the insurance, which would apply or potentially provide coverage when there is a casualty or other insurable type loss. Those provisions in your governing documents, again, in typically Article 4 of your bylaws, go through in detail the requirements for property as well as liability and certain other types of insurance coverages that an association may be carrying or likely should be carrying. There are also some insurance responsibilities or topics that are covered by the Nonprofit Corporation Act. Those don't relate so much to property coverage or liability insurance exactly. They relate more to directors and officers and protections for your volunteer directors or other volunteers of the association. They're permissive provisions. So the insurance topics addressed under the Nonprofit Corporation Act allow your governing documents to include protections for those volunteer officers and directors. So let's get a little bit more into the required insurance types. First is property insurance. Under the Condominium Act, and more specifically under the administrative rules, and even more specifically, Rule 508 of the administrative rules, associations are required to insure the common elements. Those are things like your roofs, your shared amenities, other building improvements that are necessary for the existence of the condominium. They cover damage to those property elements when it is an insurable loss, although there are many exclusions to insurance. The next type of insurance is what's called liability insurance. That covers injuries, damage to common property. That's more so where a third party or another party makes a claim against an association, and the association is in need of protection for itself from financial liabilities as opposed to just reconstruction of damaged property. under the umbrella of liability insurance is also the indemnification side of things, which are the protections for your board, your volunteer officers and directors and protections from personal liability, though there are certain limitations to those protections that are afforded to those volunteers. Lastly, again, still generally under the liability umbrella are the directors and officers insurance coverages. And those, again, are protections for your volunteer directors and officers and help to shield those individual from claims that an owner or third party might make regarding mismanagement of the association or breach of some duty that the board is assigned based on the governing documents or statutory law. So with that little bit of background, we're going to go a little bit more detailed into document provisions. Historically, condominium bylaws commonly required the association to ensure not only the common elements, again, the roofs, the building structures, those kind of building improvement aspects of a condominium, they also sometimes required the association to ensure the individual unit components, meaning the fixtures, equipment, trim, other improvements within each individual unit. And in some instances, they go beyond just that standard builder grade coverage and require the association to ensure betterments and improvements that owners may have installed within their units. That's obviously a bit problematic for an association, as you don't know what each owner might have within their unit. And not only is that a big insurance liability to need to replace, custom cherry cabinets or other significantly more expensive improvements that owners might have installed, but you don't know what they have. So it's not only difficult because of the insurance liability, it's difficult because you don't know whether you're carrying enough coverage. You can get into later in the presentation a little bit more on what associations can do to address those issues and protect yourself as the association as well as the individual owners within the community. More modern bylaws, many associations have gone through document restatement projects or have faced insurance issues and have chosen to propose or move forward with amendments to their bylaws to address those insurance responsibilities. The modern trend is to better align those insurance responsibilities with a standard homeowner's insurance policy. So the standard homeowner's insurance for a condominium is generally referred to as an HO6 policy. Those HO6 policies, which you're likely required to carry regardless of your governing documents, particularly if you have a mortgage on your unit, carry coverage for the interiors of your unit. Typically, it's going to be drywall inward, so your fixtures, your equipment, and your trim. All of those things were under historical and older documents the association may be required to carry insurance for. The shifting of that responsibility to align with that standard homeowner's insurance is helpful to not only protect against insurable losses and the value of those losses, but also to help prevent owners from paying for two insurance premiums that are covering the same items when we know that only one of those insurance companies is likely to actually provide a payout in the event of an insurable loss. Now, something to consider is that historically, before the insurance market has shifted as much as it has, insurers would look at their own policies to see what they were obligated to cover and would provide coverage accordingly. More commonly now, we'll see insurance companies, particularly the owner's insurance companies, say, well, thank you for reporting this loss. We have your policy. Please provide us a copy of the governing documents so that we can confirm what our actual liabilities and responsibilities are. If you've got older documents, even carrying an HO6 policy as an individual owner, we're more commonly seeing those insurance carriers saying, Yes, thank you for paying for that coverage. We're not actually responsible for paying for any of these loss, the property damage, any of this loss. So part of the alignment with a standard HO6 policy also helps to reduce overlapping coverages and duplicative premium payments. Going beyond the governing documents, we're going to talk a little bit about when an association is seeking the master policy, what are the insurers looking for when they're going through the underwriting process, determining whether to extend coverage for your association and when to or how to determine what that premium may look like. Some of the things that they're really focusing on now, more so than they even used to be, are the conditions of the property. Things like the age of the roofs, electrical systems, code compliance. We've seen many associations where their insurer indicated that they would not renew their existing policy because the roofs were 18, 19, 20 years old. And so those insurers are saying to the associations, we'll only extend coverage to you if you've either replaced your roofs or are under contract to replace those roofs. Another issue that we've been seeing, particularly with older developments, are the electric panels. There are several different types of old electric panels that were utilized largely in the 70s and into the 80s, which have since that time been found to be fire risks and hazardous to the community. So whereas 10, 15 years ago, the insurance companies wouldn't really be too concerned, wouldn't even necessarily know whether you had those electric panels. Now they're doing property inspections. And if they identify that your community has these old, outdated, and hazardous electric panels, they'll require, in order to extend coverage, that the association undertake a project to replace all of those panels. It's an expensive undertaking for an association. However, when you replace those electric panels, you see an actual perceivable benefit. Each owner will have a new electric panel and they'll be able to see that and perceive that benefit, which is important when you consider that the alternative is to avoid that expense of the electric panel replacement and instead just pay a significantly higher insurance premium. Paying a higher insurance premium is not a perceivable benefit. It's just money out from the association for the same coverage that you otherwise would have had under a standard policy with a lower premium rate. Insurers are also looking at the occupancy profile. How many leased units do you have? Depending on the insurer, that percentage that they're looking for can vary significantly. I've heard of insurers being concerned about percentages as low as 18%. More commonly, we think about it in the 25 to 30% range. Many associations don't have any issues with leasing. They just, for whatever reason, their community is not a place where there are a lot of landlord investors who are leasing out their properties. But if your leasing ratio is too high, too many tenant occupied units comparative to owner occupied units, the insurance companies will rate the condominium association more like an apartment than a condominium, and you'll see your premium rates increase significantly. One of the ways to address this, if your association is concerned about the level of leasing or concerned about the level of leasing and its impact on your insurance premiums, would be to consider an amendment to your bylaws to provide a limitation or a rental cap, setting a limit on the total number of units that can be leased at any time. Many associations have been doing this over the past several years, both for insurance and other reasons. Another and a major factor for the underwriting process and determination of whether an insurer will extend coverage to your association and also the premium that they'll charge is your loss history. If you're a manager and you've sought quotes from insurers, one of the things that they'll ask you for is a loss run. And what they want to see is over the past 5, maybe even a longer period of time, they want to know how many insurance claims you've filed and get details about those claims. Certain types of claims are more indicative of a property problem as opposed to just a random circumstance that occurred. If it's a property problem, neglect of maintenance and repairs over time, the insurance companies may not be willing to extend coverage or may only be willing to extend coverage with a much higher premium rate. Things like water losses from burst pipes, those are commonly looked at as a building type problem as opposed to something like a lightning strike or a car crashing into a building. Those are random occurrences that are not indicative of the risk of future loss. If you've got a pipe burst that's indicative of old, outdated plumbing that's starting to fail, the insurance companies are really looking into that and considering that as a large factor in whether to extend coverage and what the premium rate would be. I used water losses as an example, but circling back, roofs are also another example. Maybe you've had multiple water loss incidents from roof leaks. That's indicative of an aging roof that's beginning to fail and may be in need of replacement. If you don't take action and replace those roofs, not only are you going to potentially suffer further water loss or other insurable loss instances, you'll also see increased premiums and, again, potential cancellation or non-renewal of the association's master policy. There have also been some significant changes over the past couple of years related to potential liabilities and particularly premises liability or slip and fall cases that apply to condominium associations. In that first case there, Candle El Sayed versus F&E Oil, that had to do with the liability for and how the open and obvious doctrine would apply to insurable loss issues. The basic takeaway there is that whereas open and obvious used to be effectively a bar to slip and fall claims, where maybe a guest of one of your residents slipped and fell on the sidewalk entering into a building. If it's winter in Michigan, there's a pretty fair and reasonable expectation that there might be snow and ice on the ground and some risk of falling. That's where the open and obvious doctrine came into play. People should know that in Michigan in winter, there's snow and ice on the ground and there's a risk involved there. Under this case, it's no longer an absolute bar to recovery. It's now factored into what's considered comparative negligence. They'll look at maybe it is open and obvious, but were there alternative routes that the person may have taken? And just factor in that open and obvious versus how was that person who is injured approaching this scenario? Maybe they recognized that there was snow and ice, but they chose to run across it anyways. So it's really a big change in that it's, again, not an absolute bar. It's now just a factor that plays into ultimate liability for slip and falls. Another case is the Giannini versus London Townhouses case. That has to do with whether a co-owner is able to make a claim against the association. Historically, because co-owners are part owners of the common element property, they wouldn't be able to make a claim against their association. They're not considered an invitee or a guest or some other user of property. They were considered an owner. And as an owner, it kind of is along the lines of you can't sue yourself. However, under this Giannini versus London Townhouses case, the court determined that co-owners are considered invitees, which means that the association has the heightened duty of care under premises liability law to ensure that reasonable actions are taken to clear ice and snow or to avoid dangerous circumstances, dangerous conditions on the property. So the big takeaway from that case is just to know that just because a person is a co-owner, that doesn't prevent them from making a slip and fall or other premises liability type claim against an association. One of the big factors that court was considering and really elaborated about in its opinion was not just the ownership, but the control of the actual property. So in that case, it had to do with a slip and fall in an area where the association was responsible for the element. Because the association was responsible, it also had the obligation to remove snow and ice. On the other hand, if it's a limited common element porch or patio area that is assigned to the individual owners, the court would look at that a little bit differently, because even though it's a common element owned by all owners in proportionate share, if it's a limited common element that is the responsibility of the owner, then it would be more difficult to make a claim against the association because the association doesn't have the duty to remove snow and ice from those areas. Gabrielson and the Woods condominium was sort of similar. A tenant actually tripped and fell on a limited common element area that had been modified by an owner in the past, but it wasn't properly maintained. So the individual, again, tripped and fell and was injured and filed a lawsuit against the association. And the court in that case, applying the factors from Candle El Sayed and Giannini, determined that because it was an area where owners were responsible, that the association didn't have the same liability as if it had been a general common element area where the association had sole responsibility. So just to kind of summarize the main takeaways from that, open and obvious is no longer a complete bar to claims. So just because someone slipped and fell on ice in Michigan in the winter, that doesn't mean that that claim is invalid or that the association will automatically succeed. There's much more that goes into the analysis, and a lot of different factual circumstances are considered. Again, under Giannini, co-owners are considered invitees. So the association, just like any other invitee, if an owner has a guest over, someone who is otherwise invited or a guest of an owner onto the property, the association has that highest duty of care under premises liability law. All of this together is really just a great reminder and emphasis on the importance of proactively mitigating risks. If you've got a sidewalk that's pitched and creating a trip hazard, you should go out and maybe lift the sidewalk flag or otherwise repair that to avoid that trip hazard remaining in existence. It's also important to ensure that your snow and lawn contractors are taking appropriate and timely action to remove snow and ice from the common elements where people will be walking and which are an association responsibility. So tying that back to insurance, even more specifically to association insurance and the impact on the association premiums and the availability of insurance, these cases all factor together, creating a higher liability exposure. So whereas before, if someone slipped and fell in a parking lot of your community, open and obvious might provide an absolute bar to that claim, and it goes away rather quickly. However, now, because they have to do these detailed factual analysis, and it may go all the way to trial, it means increased insurance defense costs, which, assuming it's a covered claim, are going to be paid by your insurer. But that just means that the amount of the claim that the insurance company is paying out is much higher than it would have been previously. Also, something to consider for boards and managers is considering increased insurance limits, helping to cover for these insurance defense costs and the potential of an eventual judgment or settlement amount where the association or its insurer has to pay out to the injured party. So what can you do about this? When it comes to the premises liability aspect of things, and I alluded to this a little bit earlier, you could consider amending your documents to shift the responsibilities. So things like porches and walkways, which often are maintained, repaired, and replaced by the association, if you shift that responsibility to the owners, then the concept of the association being sued is limited. The owner is really the one that's in control and responsible for the snow and ice removal or other maintenance, repair, and replacement of those items, which means that their insurance would be the ones that are where the claim ends up being submitted. The other thing is, again, promoting the use of reasonable care and addressing any issues that you come across on your common elements, which might present a risk or be a dangerous condition that could cause injury to individuals. So make sure that you're inspecting your common elements and taking appropriate action. It's much cheaper to do some maintenance, repair, and replacement now than it is to deal with the increased insurance premiums, potential cancellation or non-renewal, and the increased insurance costs related to hazardous conditions and claims against the association. In addition to these insurance trends and things that are a little bit more localized, there are also some national things that have occurred which are having an impact on association insurance. We all remember the disaster in Florida several years ago, where due to a lack of maintenance, repair, and replacement, a building collapsed. In that instance, the insurers in total ended up paying out over $1 billion to injured parties or their survivors. That's a lot of money for these insurers to have paid out for that damage claim or for the related claims, and they have to recover those funds somehow. And so the national insurers, who are also providing coverage to Michigan associations, have to consider that and increase premium rates so that they can ensure that they're not losing money by providing this insurance to associations. Just like everything else, replacement costs of construction have skyrocketed. This happened a lot after COVID and the pandemic, but it's just a continuing trend that is likely to continue with other factors that are now coming into play with the increased cost of importing goods and just the increased cost of construction and replacement. When an insurer is considering the premium that they need to charge an association, they're considering the insurable value of the property and the replacement cost for that. With higher replacement cost comes higher insurance premiums. Touched a little bit on the pandemic in the last point, but there are also other emerging risks that have been coming about for years, but are becoming increasingly more common. Things like cyber threats, health-related liabilities. On the cyber threat side of things, we've all heard stories about people getting scammed out of their life savings. To protect the association's funds, insurers are considering the potential that an association's funds might be subject to those same types of scams, whether it's a bank scam or some other type of scam where somebody gains unauthorized or unintentional access to the association's funding. Those are things that may be covered by insurance, but that insurers are also considering when they're determining the premium rates and the availability of coverage for different associations. So with all of that, what should you as a board member or manager be doing for the association you are a board member at or the associations that you manage? One thing is policy review and updates. You should be regularly talking with your insurance advisors, discussing conditions on the property and what their recommendations are to protect the association, avoiding claims, avoiding potential policy cancellation or non-renewal, and properly, performing maintenance, repair, and replacement, which goes to this next point. Routine inspections and hazard audits. Walk the property, see if there are trip hazards. Make sure that your roofs are being replaced at an appropriate rate. Perform all of those preventative maintenance items. Again, one that I mentioned earlier that is important for particularly older communities is the consideration of your electric panels. Seen countless numbers of associations facing that issue, and the end result, even if they're able to find an alternative insurance provider, is that they're going to need to replace those panels so that they can get back to a tolerable insurance premium rate. If an insurer is willing to provide coverage and you have those aging, outdated, and dangerous electric panels, the insurance providers are either unaware of it or are going to factor that and increase your premium rates significantly. Education and information. Make sure that all of the members of your association are aware of their insurance responsibilities so that they're carrying the appropriate and adequate coverages. And also, as a board, make sure, again, you're working with your insurance advisors, your management company, maybe even your attorneys to make sure that you're carrying not only the appropriate coverages, but also coverage appropriate to the proper limits. Different properties have different values and different insurable limits, which are necessary based not only on the value of the property, but also other risks that we've been talking about. Lastly, consider amendments to your governing documents. You can amend your leasing provisions to place a cap on leasing and gain control of that to avoid insurance increases just because of too many leased units. You can also, again, revise your insurance provisions to better align them with the realities of the insurance that owners are likely already carrying, particularly those who have mortgages on their units. By aligning those insurance responsibilities, you avoid duplicative coverage as well as paying two premiums for the same coverage when you know that only one of those insurers is ultimately going to end up paying out. Now we're going to go ahead and open it up for questions. I'm sure that there will be a lot, so I wanted to save a lot of time for that.
Excellent. Thank you so much, Evan. And yes, in fact, we do have some folks that have already given us some good questions to consider here. Stephen is asking under typical modern bylaws, don't electrical panels typically fall under co-owner responsibilities? And if so, how can associations direct or compel a co-owner to replace their old panels?
So that is a great question, and it is very community specific. In some, like I'll use apartment style communities as the first example, sometimes those electric panels are not actually going to be within the unit. And based on the responsibilities in your governing documents, and just a minor point of clarification, the underlying day-to-day responsibility for maintenance, repair, and replacement is covered in your master deed. Typically, it is Article 4 of your master deed, but that's where you're going to find whether it's the association or the owner that is actually responsible for those electric panels. You are correct that in many communities that have gone through document restatements over the past, several years or maybe even a decade or two, they have specifically shifted that responsibility to the owners. To the second part of that question, how do you compel an owner to replace that panel? Well, if you've received a notice from your association's insurer, that provides great leverage, but then you're also going to be looking at the governing documents. Most bylaws will provide the association with myriad remedies to address owner violations. And if you've got an issue with a dangerous condition, like an outdated and hazardous electric panel, the association does have a variety of remedies to force an owner to replace that panel, excuse me, to avoid the increase or potential non-renewal or cancellation of the association's policy. Even if that electric panel is something that a co-owner is responsible for the maintenance, repair, and replacement and the insurance of, it can still have a direct bearing on the association's insurance rates.
Okay, thanks for that, Evan. And we have another question here from Nora. Like to know, how does a board perform a routine inspection and or hazard audit?
Yeah, so that's something that you can work with your management company on, or if you're a self-managed community, it's really things that a board is likely already doing, at least on a semi-regular basis. Things like a spring walkthrough or other routine just walkthroughs of the property to identify things that may pose a risk or pose a hazard to your owners, your residents of your property. I mentioned looking at the sidewalks if your community has them. You know, you might find trip hazards. The other thing would be seasonally inspecting the work of your lawn or snow contractors, making sure that they're properly cleaning those walkways and parking areas to ensure that people have a clean and safe means of exit from their vehicle and walk to their unit entry doors. So it's really largely just going to be walkthroughs, inspection of the property. You might need to engage particular contractors for things like roofs. But it's really just knowledge of your property, knowledge of things that could present potential risks to owners or other users of that property.
Great, thanks, Evan. And let's see, we have another question here from Mark. Mark asks, following the Champlain Towers failure, and you mentioned that that's the building collapse in Florida, of course. For those of you who might not be familiar, he says, I have been told that everybody, including management companies, had to pay out. Does this place an additional burden on management?
So that was a unique circumstance, and I don't know all of the details offhand about which entities or which parties had to pay out. I had heard that even some of the law firms down there that had been working with that association in particular could have faced potential liability, or there were at least claims made against them. And really, that aspect of it all related to the inaction of the board in properly maintaining, repairing, and replacing the common elements of the community. Without getting into too much detail, the real underlying cause for that issue was that lack of repair and replacement, and that association, that board or prior boards had actually been aware of and had inspections of the elements that ultimately failed and led to the collapse. They knew about the issues, but because of the expense in repairing them, they had chosen to not undertake that work, at least at that time. Unfortunately, they waited too long and the tragedy occurred. So when it comes to that and potential liability of management companies, again, that was a very unique and particularized situation. And any liability for board and management there had to do with their prior knowledge of these building issues and their failure to take recommended and appropriate actions to repair those items.
Okay, terrific. And then let's see. John asks, how successful have you been with bylaw amendments to cap rental numbers when the association has a very high rental rate?
That is a great question. So overall, the ability to pass an amendment like that is largely going to be based on your existing rental rate, working with a law firm such as ours to determine what an appropriate level to set your cap at would be based on your existing rental rate, and then the presentation to the owners. Overall, we see a lot of those amendments passed. Occasionally they fail. Typically when they fail, it's because a community, I hate to say it this way, but sort of waited too long. Once you get to, say, 50 or 60% rentals, it becomes very difficult to convince those landlord owners that this amendment would be a good thing in the future for them, for their own property interests, but also for the association as a whole. So if I can provide one sort of generalized recommendation when it comes to leasing concerns and potential amendments, is address the potential issue before it actually becomes an issue. By the time you've got too many leased units, and too many is subjective and varies by community, but by the time you've got too many, it becomes a much more difficult task to accomplish, just because it's difficult to pass a rental amendment when there are already a significant number of leased units.
Okay, and we have a question about site condominiums. We have a few questions about this actually that are kind of similar. I guess are there any special considerations regarding insurance that site condominiums might be looking at? Also, specifically, somebody asked about the association's role in establishing co-owner insurance limits with respect to site condominiums.
So when we're talking about site condominiums, I'm going to put a little caveat in here that we're talking about true site condominiums, where the unit is the property and the residence or the dwelling that is constructed within the unit is the sole property of the individual owner. I add that clarification because there are also what appear to be single-family homes that, based on your governing documents, are more kind of accurately described as detached condominiums. But ultimately, when it comes to insurance and insurable events in site condominiums, from the association's perspective, you want to have a firm and solid understanding of the association's responsibilities for things like roads, sidewalks, and other common amenities that people are utilizing. Ensure that not only you're maintaining, repairing, and replacing those to avoid unnecessary risk, but also that you're carrying enough liability and coverages to protect the association in the event that there was some premises liability claim in those common areas that are open to everybody. When it comes to ensuring or making certain that owners are carrying proper insurance coverage, in some respects, it's a little less important in a site condominium, because sort of worst case scenario is a home burns down. Let's assume for the sake of this example that nobody's injured, thankfully, but the home burns down. And maybe that homeowner wasn't carrying proper coverage, so they can't rebuild their home. Well, you can, at a minimum, clear that site out, restore it to just natural ground or more or less natural ground. And the worst aspect there is that you're now missing a home. On the other hand, encouraging, educating, and making certain that your owners, your members, are carrying the appropriate coverage for their own homes helps to avoid that risk. But the reality is, if somebody's injured or there's some property damage claim within a true site condominium unit, the association is not going to have any big liability risk there. It's primarily going to be on the individual owner.
All right, terrific. And then we have Rod has an interesting question. Our association is in northern Michigan, where ice and snow are very common in the winter, many times without warning. Is it reasonable to supply a written document to your snow plowing service on expectations?
Yeah, so absolutely. And having reviewed many snow contracts myself, commonly you will see certain requirements for both the time frame for the response of the snow contractor, as well as what weather events trigger that response time. Different associations have different, decisions and considerations when they want their snow contractors to come out. We commonly see them at 1.5 inches of new snowfall. The contractor will be obligated to respond to the property. Different time frames for that response vary, of course, but we often see that within, I've seen it as low as an hour and as high as 4 hours. Something to consider for those northern Michigan communities is, looking back at that open and obvious, again, it's no longer an absolute bar to premises liability claims, but the expectation of weather in your localized area would be another factual circumstance that could play into the ultimate analysis and determination of liability. There's much more expectation of snow and ice if you're near Traverse City area or on the west side of the state than there would be if you're in the southeastern portion. Just snow and ice events occur more frequently up there, so it's even more expected that you might face those conditions.
Okay, keep on rolling in. We got a lot of great questions. Thanks, everybody. Richard asks, can you talk about the ability of the HOA to conduct inspections of common and limited common elements for safety issues, such as an electrical panel within a unit? So I guess gaining access as needed.
Sure. So that's going to be a little bit document specific. So really you need to talk to your attorney to really delve into that issue more deeply. However, I will say in general, most condominium bylaws provide the association with access to all of the common elements and with notice access to the kind of limited common elements that are really only for one unit's use, as well as to the individual units. In emergency circumstances, you'll typically have the right to gain entry without any notice. So you see a smoke billowing from a unit, you can break down that door to address the fire issue. If you see water flooding out the bottom of a door, likewise, that would be looked at as an emergency scenario and you can just gain access as is reasonable. When it comes to less emergencies and more just property inspections to understand what you have, one thing is for board members to know what they have in their own units. Typically, if you've got a community that was built years and years ago, decades ago, board members are going to have the same electric panels that other unit owners have, unless they've been replaced and upgraded. So again, a little bit generalized, but most documents would provide the association with that access upon notice to the owners to inspect common elements or other items in the unit that may have a bearing on damaging other units or other common elements. So electric panel inspections, insurance that there are smoke detectors, maybe even carbon monoxide detectors, things of that nature are subject to generally the association's control and inspection to ensure that the community as a whole and individual owners are all protected.
Great. And Carl asks, can an association require owners to install and maintain smoke detectors in their units? If so, does this indemnify the association from liability related to a fire caused by an owner that doesn't comply?
So the building code is going to require owners to maintain operational smoke detectors. And although not historically necessarily true, more modern documents also often include a requirement that owners maintain operational smoke detectors. If your governing documents have that obligation on the owners, or even really if they don't, it would be entirely reasonable and appropriate for the board to require some level of proof from those owners to confirm that they do in fact have operational smoke detectors. Another thought on that is depending on the nature of your project, and this would typically more likely be true in an apartment style condominium, you might have a fire or smoke alarm system that is all connected. So it's hardwired, and so the association would know and be able to maintain, repair, and replace those elements when it's a common shared system amongst units. As far as the indemnification side of things, requiring or ensuring by inspection that owners are in fact maintaining operational smoke detectors is a great protection and would be great argument in defense of the association, but it's not going to provide absolute indemnity to the association. I will say, depending on your governing documents, If someone were not maintaining operational smoke detectors and there was an unfortunate fire in their unit, it is more likely that the association would be able to charge that owner for any out-of-pocket expenses the association incurs in responding to that issue.
Excellent. And if a board needs advice on insurance, where should they go?
So it depends on exactly what advice you're looking for. Just like with any other topic, I would suggest going to the professionals. So if you're considering what coverage you should be having, whether you're carrying enough coverage, I would encourage you to talk with your own insurance agents, your own insurance professionals. If you're having issues with interpreting your documents about insurance responsibilities, that becomes more of a legal issue, and you should contact the association's legal counsel.
Great. And then we have a question about mortgagees or mortgage holders. Do mortgage holders have any say in bylaw amendments by the association?
So there are certain instances, including reassignment of insurance responsibilities, where under the Condominium Act, you are correct that mortgage companies do theoretically have a say in the amendment process. Realistically, what it comes down to is they have a right to vote on proposed amendments that have been approved by the co-owners. So if you were going through an amendment process, taking your old insurance responsibilities that place most everything on the association, and you're updating them so that they're balanced a little bit more, and owners actually have that obligation to maintain an HO6 policy, you would need to go to all the banks or lenders that hold first mortgages on any unit. Now, with all of that said, from a practical standpoint, once the owners have approved, we'd send the mortgage voting documents out to all of those banks or lenders. And under the act, they have 90 days to respond. At the end of that 90 days, if they haven't responded, it is considered a yes vote. And again, to the practical side of things, the vast majority of banks simply don't respond, which is why the Condominium Act was changed years and years ago, so that that non-response counts as an automatic yes vote.
Excellent. Thanks. Thanks, Evan. And we have another question here from Dan. We have 2 ponds with concrete walkways around them. We clear snow from sidewalks along the streets, but not the sidewalks around ponds due to cost. Can signage, for example, sidewalk not maintained in winter, around the pond walkways potentially mitigate liability issues?
Mitigate, yes. Totally absolve the association, probably not. But with appropriate signage, again, considering basically the elimination of the open and obvious doctrine as an absolute bar, it wouldn't be reasonable for somebody to walk on one of those clearly non-maintained, non-snow removed sidewalks and then argue that the association's liable to them when they have notice based on the signage and based on the obvious conditions of the sidewalk that they're not being maintained, and that there is the significant potential of ice under the snow or ice and snow, creating a potential slip hazard for them.
Okay, terrific. And we have another question. How do you enforce individual unit insurance coverage? Of course, in the bylaws, it's very common to require individual co-owners to get insurance, but how do you enforce that?
Yeah, so there's a couple of ways. In a very general sense, if owners are required under your documents to carry insurance coverage, the association can require annual proof that the owner is maintaining that coverage. It becomes a little bit of an administrative burden on the association and your management company to require that proof. But if they fail to do so, it's considered a violation of the documents and can be enforced just like any other violation. Additionally, bylaws commonly include a provision that permits the association to actually maintain that coverage for the owner and charge them back for it if they're failing to maintain it on their own. Now, whether you go down that path or not, I would suggest consulting with legal counsel before you do so, because there are other enforcement options before you would get to that point. But ultimately, again, an association typically will have the authority to actually obtain that coverage for the owners and charge them back for it.
Excellent. And we have another question here, sort of along the same lines of the co-owner insurance. Is there any additional language that a co-owner needs to have included in their individual insurance, such as naming the association as secondary insured?
That is not something that we commonly see discussed. And as an individual owner, as opposed to looking at it from the association perspective, I would suggest that those individual owners be encouraged to contact their own insurance agents to talk through that issue. There is also a somewhat uncommon provision, but is occasionally seen, which actually requires the individual owners to indemnify the association for insurable type losses. So that's something else to consider along those lines.